I think every single currency is going to end up being digitized for sure.
If you look at China, I think roughly 20% of their population is unbanked, which sounds crazy, but 20%, and they have 1.4 billion people in China. So call it, nearly 300 million people are unbanked in their country, which is almost the size of the United States for comparison, right? The pro case for a central bank digital currency is that this gives access to people that potentially might not have access to a bank or a currency system or just kind of the financial infrastructure that it does now. Ultimately, I think that's a trade-off between security and all these other things, right? But do you think that's like a happy medium approach and ultimately that transitions more people to Bitcoin and other assets like that? Or do you think it's just a terrible idea altogether and the unbanked people should find these assets on their own?
I think that what's going to happen is as all these currencies get digitized, the nation states are going to drive adoption of digital wallets. And once you drive adoption of a digital wallet, value will flow to the strongest, soundest money as a store of value. And then there will still be requirements to use specific fiat currencies, right? Whether it's the dollar to pay taxes or merchants will accept certain currencies or whatever. But I do think that that's the way that most people are going to get onboarded. We got to 100 million people or so without the nation states. But in order to go from 100 million to 7 billion, I think what's going to end up happening is the nation states believe their ability to compete in the marketplace is that they have a monopoly on monetary policy and the production and distribution of the fiat currencies. And so what they're going to say is, oh, you guys want digital currencies? Great. We're going to digitize our currency, keep the same monetary policy. Let's get that into your hands. But when they do that, they're going to drive adoption of the digital wallets in a way that the private sector couldn't do alone. And when they go ahead and they drive that adoption of digital wallets, then all of a sudden people are sitting there and saying, okay, now that my switching cost between all these assets is near zero. And so the weak currencies are going to actually accelerate their own demise. The strong fiat currencies will actually be a beneficiary because the weak currencies fail or are less popular. And then ultimately something like a Bitcoin, all it needs is more people with digital wallets and value naturally flows. It's kind of like on an exchange, right? Like liquidity begets liquidity. If there's an exchange with a dominant amount of liquidity, everyone starts to trade there and it locks in like a network effect and it becomes just so dominant that you can't unseat it. Same thing happens here is once you start to get a store of value, I think a lot about like store of value begets store of value. So if people start to use something as a store of value, and then as that works, more people see that, they begin to store value, and then all of a sudden you just have this network effect where it ends up serving as a better and better store of value over time. Gold did that for a really long time, for literally thousands of years. And so just like liquidity begets liquidity, store of value begets store of value. And ultimately what the fiat currencies are going to end up doing is dominating as a medium of exchange in the short term. And something like a Bitcoin, I think, as it has over the last 12 years, has been the single best store of value that you could possibly hold. And people are waking up to that. They're getting educated on that. They're realizing, okay, it started out with, that's a crazy idea. Then it was like 1%. Then it was 3%. Then it was 5% of their portfolio. And now I think you've got an entire generation of young people who are growing up and they're saying to themselves, why do I not have majority of my net worth in sound money? Right. And it's not a question of what is the financial gain from like a percentage basis against the dollar. It's simply how do I protect my purchasing power in a high inflationary environment? And I think that's ultimately where you're starting to see separation from the generations, where the older generation, they know that holding the dollar doesn't make sense. Ray Dalio, cash is trash, all that. Their solution is not to find a better savings tool. Their solution is to go risk money in the market and to try to outpace with their financial returns the inflation.
Yeah.
But what young people are realizing is like, hey, that's a fool's game to many people. And so instead, why don't I just save in a better savings technology? Right. And then, oh, by the way, I don't think of it in terms of what's the US dollar value for it. I just think of it in terms of Bitcoin, right? How much Bitcoin do I have? I just look at, okay, today I have X number of Satoshis. How many do I have tomorrow? And the day after that and the day after that. And there's no coming back out of it because it's technically a savings tool that they're looking at over decades. And that return of long-term thinking is in direct opposition to the short-term thinking that's driven by fiat currency. And the fiat currency is the constant feeling of never being able to get ahead. Right, you're the rat on the wheel. You're just running and running and running. And every time you like, oh man, I got a 2% raise at work, I got a 4% raise at work, I got a 5% raise at work, but everything got more expensive around me. How the hell is it that my rent's going up, my mortgage payment's going up, my cost of groceries is going up? When I go to a restaurant, it's going up. Like I can't catch up. And so you constantly feel like you're falling behind. And when you feel like you're falling behind, it gives you short-term thinking. And when you have short-term thinking, you end up making bad decisions. When you then go and you start to save in a sound money technology like Bitcoin, now all of a sudden, everything's getting less expensive around you, right? That rent payment, that grocery bill, that restaurant bill, everything is getting less and less expensive over time because the asset is outpacing the actual increase of prices. And when you do that, now you can have a long-term thinking. You actually don't want to make short-term decisions because the short-term decisions will, in hindsight, look financially stupid because you basically took the Bitcoin, you bought, an 80-inch screen TV, and you're like, man, I'm balling. And then you're like, damn, that $800 that I spent in Bitcoin in 2014 to buy the 80-inch screen TV is now worth, whatever, $1 million or $100K, whatever the numbers end up being. And so you start to say to yourself, wait a second, I have to think long term because of the way the asset is built. And so ultimately what you get is you get two different perspectives. Those two different perspectives are driven by the monetary structure of the assets. And when you have a difference in monetary structure, what you get is you get a different level of decision making. And so monetary structure drives perspective, perspective drives action. And so now what we're literally doing is you're basically handing an entire generation of people a brand new asset that they can save in, that they think long term. They don't make stupid financial decisions. And my guess is that the Bitcoiners aren't going to have the same financial troubles that people 40 and over have in terms of having incredibly high levels of debt, not having money for retirement, like all these issues that the 40 and older crowd has is all driven by the fiat currency, forcing them to make short-term decisions. And it literally incentivizes you to take on more debt. It incentivizes you to do this stuff. Whereas the sound money doesn't do that. And I think that's ultimately like the true impact of this asset is when you hand this to a population globally, you're going to change the world, but you're not going to change the world in kind of the woo-woo Silicon Valley way. You're going to change the world because you're quite literally going to change the perspective of people. When you change their perspective and make them long-term thinkers, you change their actions. And what it does is it ultimately pulls all the people in the bottom half of that wealth disparity gap. You pull them back up closer to the top because now every single person, whether you're Michael Saylor with 120,000 Bitcoin or you literally have 5 Satoshis, you mean the exact same to the network. You have no extra control, regardless of how much you have no extra say. There's no Cantillonian effect. There's none of that stuff. It's just if you hold Bitcoin, you get the same exact protection and you get the same exact treatment from the network, regardless of how much you have. And so then it comes down to what percentage of your net worth are you actually protecting with this asset, right? If Michael Saylor had the ability to buy 500,000 Bitcoin and he only bought 120,000, right? Let's just say on average about 20% of his wealth, and you have less money, but you protect 100% of your net worth, right? You actually have more protection than Michael Saylor has because you've been able to convert more on a percentage basis than he has. Now, the numbers are different, but you're treated exactly the same by the network. And that's the key piece, is that there's an equal opportunity for economic protection by Bitcoin and by a decentralized computing network now. And anyone in the world, whether you're the largest asset manager, you're a nation state, or you're literally a pleb sitting in your basement hoping that your mom brings you some ice cream downstairs, you get protected by the Bitcoin network the exact same. And that's the beauty of this whole thing.